Determining taxable income for corporate tax purposes. In tax law, the tax base refers to what is subject to tax. For corporate tax purposes in the UAE, the tax base is the taxable income of a taxable person. The calculation and determination of taxable income follow specific guidelines and conditions laid out in the corporate tax law. Below is a detailed breakdown of how taxable income is determined for various types of taxable persons. Resident persons. Resident persons are subject to corporate tax on all income, whether derived from within the UAE or from outside the UAE. This means that if a person is considered a resident for corporate tax purposes, they will be taxed on their global income. A person or entity is generally considered a resident person if it is incorporated or managed in the UAE, or if it meets other residency requirements as specified under the UAE corporate tax law. Non-resident persons. Non-resident persons, on the other hand, are only subject to corporate tax on income attributable to a permanent establishment, pay, or a business nexus located within the UAE. A permanent establishment refers to a fixed place of business through which the non-resident person conducts its business activities in the UAE. If a non-resident person does not have a permanent establishment or nexus in the UAE, then the income they derive from the UAE will generally not be subject to corporate tax. However, withholding tax at a rate of 0% will be applicable on income derived from the UAE, in the absence of a pay or nexus. Natural persons. Natural persons, such as individual business owners or entrepreneurs, are also subject to corporate tax. However, their tax obligation is confined to the income generated from their business activities. Specifically, business or business activity derived from the UAE. Taxable income will be derived from the business or business activities conducted within the UAE. Business or business activity connected to the UAE. If a natural person's business activities are outside the UAE but are connected to business or activities carried out in the UAE, they will be subject to corporate tax on this income as well. Determining taxable income. The taxable income for a taxable person is determined by adjusting their accounting income. Accounting income is derived from the financial statements that are prepared in accordance with accepted accounting standards. The taxable person's financial records will be subject to adjustments outlined in Section 6.2.2 of the Corporate Tax Law. For tax purposes, the accounting standards recognized in the UAE are the International Financial Reporting Standards, IFRS, or IFRS for SMEs, for businesses with annual revenue of AED 50 million or less. The application of these accounting standards ensures that financial statements reflect a true and fair view of the business's financial performance. Adjustments to accounting income. The process of adjusting accounting income involves applying specific rules and provisions set out in the corporate tax law. These adjustments might include the treatment of certain expenses, income, or deductions that differ between accounting rules and tax rules. The adjustments ensure that the accounting income reflects only the amounts that are subject to corporate tax. If a taxable person already maintains financial statements in accordance with accepted accounting standards, such as IFRS, these can be directly used to calculate taxable income. Provided the necessary adjustments are evidenced and documented, taxable persons generally do not need to maintain separate records for tax purposes. This simplifies the reporting process, reduces administrative burdens, and helps ensure consistency between accounting and tax reporting. Administrative simplifications for certain businesses. For some businesses, particularly smaller ones, the transition into being subject to corporate tax may involve new obligations, such as maintaining financial statements. However, there are administrative simplifications to help mitigate the burden of these new requirements. Small business relief. Eligible small businesses can benefit from small business relief under the corporate tax law. This relief simplifies the calculation of taxable income and reduces the record-keeping obligations for businesses with low levels of revenue. Under this provision, such businesses may not be required to calculate their taxable income in the traditional way and will have reduced record-keeping requirements, making compliance more manageable. Cash basis of accounting. Taxable persons with revenue of AED 3 million or less in a given tax period are allowed to prepare their financial statements using the cash basis of accounting, rather than the more complex accrual basis of accounting. This approach allows businesses to report income and expenses only when cash is received or paid, rather than when transactions occur or are recognized in the books. In certain exceptional circumstances, businesses may also apply to the Federal Tax Authority, FTA, for permission to use the cash basis of accounting, even if they exceed the AED 3 million revenue threshold. This can be particularly useful for businesses that have cash flow challenges or where accrual accounting might not provide a true reflection of their tax obligations. Key points to remember. 1. Resident persons are taxed on all income, both inside and outside the UAE. 2. Non-resident persons are taxed only on income attributable to a permanent establishment or nexus in the UAE, or on income derived from the UAE subject to withholding tax at 0%. 3. Natural persons are taxed on income from UAE business activities or income connected to their UAE business activities. 4. Taxable income is calculated by adjusting the accounting income in line with tax law provisions. Accepted accounting standards are IFRS or IFRS for SMEs for smaller businesses. 5. Businesses that already maintain accepted financial statements may use them to calculate taxable income without needing to maintain separate records. 6. Small business relief provides tax simplifications for businesses with lower revenue, reducing tax compliance burdens. 7. Cash basis accounting is available to businesses with revenue under AED 3 million, simplifying their tax reporting.